Hi there, I'm Champion Trader Kevin Davey, and in today's Algo trading test, we're going to look at a mystery algo. Ooh. So let's get started. Okay, so today we're going to look at a mystery algo. It's not really a mystery because I'm going to tell you what it is, but it's a mystery why it came about. And it came about from a viewer comment. So if you were ever wondering, hey, does he actually read his comments? Does he actually do stuff? I got a comment here, and this was in regards to a breakout video I did, a breakout entry. You might remember that. It's in my playlist of algo trading strategies. You can go back and look at it. And the commenter said, how do you treat volatility with the breakout? And what he said is, he likes them more when the volatility is low. So I thought, well, hey, I just tested a simple breakout. Let's try it with some volatility, see what happens. So it's a classic breakout strategy with a simple profit target without a stop. It's based on entry number 4 in my 9 entries entry book, which you can get for free if you sign up at my website for my free algos. That book comes with it. So here's the algo system rules for just the breakout system. You just calculate the highest high and lowest low, and then you buy at market with a stop order, vice versa for short. Pretty simple. So that was what I did test. That was entry number 2. And there's the Tradestation Code for it. Now what I'm going to do is I'm going to put some volatility measurements on it. And the commenter said, hey, the low volatility, I'm going to give you a bonus. I'm also going to test high volatility. So I'm going to try 2 different versions with this. So let's first look at version number 1. It's going to have the volatility filter, and it's going to calculate it based on the 14 bar and 50 bar average true range. Okay. And if the 14 bar average true range is greater than the 50 bar, that implies the volatility is higher than normal. I'm using the average true range to measure the volatility. So if the 14 bar is greater than the 50 bar, that means the volatility in the last 14 bars is higher than the recent average. So that's going to be when you buy at the market. And vice versa for selling short. But again, the only vice versa part is you do the lowest low. It's still going to go with the high volatility. Okay. And again, we have the simple profit target. So here's the Tradestation Code for that. And again, if you don't know Tradestation, my guess is you can probably read this and understand it. It's not that complicated. There's a reason they call it easy language, because it's pretty easy to understand. So the way I did the profit target down at the bottom is I calculate that at the end of every bar. So that's why it's set up the way it is instead of using Tradestation reserved words, which we'll treat it a little bit differently. But you basically would get the same results. Okay, so first what I'm going to do is I'm going to do a breakout length from 10 to 30, steps of 5, profit target from 1,000 to 3,000, steps of 1,000. So this is the same exact test I did with just the simple breakout because I wanted to compare apples and apples. And to do all this testing, I use what I call my secret weapon. It's multi-op software. It's special software only available to Strategy Factory students. It was actually written by a Strategy Factory student who was a programmer and wanted to automate a lot of what we do. So it has a lot of my rules built into it. It allows you to test things ton quicker. I mean, you know, what would have taken a day before might take an hour now, depending how you set it up. So this really allows me to do a lot of testing. It allows me to bring you a lot of research too. And my Platinum Strategy Factory students actually get this software for free, and it's tremendous. It will, once you learn the process of building strategies, this will help you build them a lot quicker. Okay, so that's what I used here. Here's a sample trade of just a breakout, and you can see it's kind of like the highest high and it buys above it, it buys, and then a little later it sells. Pretty simple. When I look at preliminary testing over 2 years, I've got 87 different combinations of markets and bar sizes that pass. So there's quite a bit of potential here over the last couple of years. Over the last 15 years, here's some walk-forward results. This is unleaded gas, 120 minutes. Looks pretty good. There are some significant drawdowns, especially unleaded gas. It's kind of crazy. And then here's a currency strategy, Japanese yen, 1440 minute. And you can see there's some flat periods where it actually just sits on the sidelines, which is nice. Some strategies you want in the market all the time. Some strategies, it's better to be on the sidelines sometimes, and this one does that. So when I look at trading potential, what's worked over the last 15 years, again, I've showed this in other videos. There's 8 combinations that work really good, and those are them. And if you notice, 4 of them are lumber. That's LB. Lumber's kind of a scary thing to trade. If you go to my website, there I have a good article on trading lumber. I traded it in early 2022 when the price was going crazy, and it just scared the bejeebers out of me. Even just trading one contract, it was like lock limit up and I was short, and then it lock limit down and it was going in my favor. It was crazy. But especially since lumber's been so volatile lately, and such a big uptrend, big downtrend, I think another big uptrend, it's a good candidate for this breakout strategy because the past couple of years have been great for it. But those are all what I call high potential. Those might work. Okay. Now, that's with the high volatility. What about low volatility? Okay. So again, you calculate the same values, but here, instead of a greater than sign, it's a less than sign. So you want your 14 bar average true range to be less than your 50 bar average true range, right? That means low volatility recently. And all the other rules are the same. So literally it's the same exact code as the previous one, except instead of a greater than sign, I put a less than sign. Again, I ran it on the same markets, same bar sizes, same number of iterations, same input variables. And on this one, I got 114 combinations. So the last one, this did better than the last one. So a little more potential recently with this, with going with low volatility. And that's what the commenter mentioned too. He liked low volatility more. And here's a couple examples of a 15-year walk-forward test. Soybeans, 60 minutes, and the NQ, 1440. You see it, and again, remember, there was an earlier video I showed where there's this hockey stick where it's flat for a while and then it's just taken off the last few years. You'll see that with quite a few strategies. Now, it doesn't mean it's going to keep going up. It could go back to this hockey stick and then it would be like a double hockey stick, but that's what it looks like. Now, doesn't mean this is something you're going to trade, but it means it's something worth investigating a little bit more. So there is trading potential here. And over the past 15 years with this low volatility, there's actually 18 different combinations that looked good and a lot of different markets. There's unleaded gas, there's coffee, cotton, sugar, gold, soybeans, wheat, Kansas City wheat, which is hard red winter wheat, a lot of different things. So that's kind of neat when you see a strategy potentially working on a lot of different markets and bar sizes. It makes you feel a little bit better about it. I don't make it a requirement that, it must work in 10 different markets. Some people do. But at the same time, I do like to see this. It gives me a little more confidence in the system. Because at the end of the day, when you start trading this live, you're going to need confidence. You're going to need confidence in what you're trading, how you develop the algo. Because otherwise, as soon as you hit a drawdown, you're going to quit. And you don't want to do that. So let's compare all the breakout versions. So strategy number 2, another video, was just a simple breakout. Then strategy, what I call strategy 7, is the high volatility, and 7A is the low volatility. And you can see the low volatility wins with the high volatility being second and just the normal breakout being the worst. So the commenter had an excellent point, and I verified it through my testing at least, that hey, the low volatility does seem to be better in general. Now you might be able to come up with systems that work with all three of those variations. You have to test it and see. Okay? So again, none of the strategies I've showed are what I would consider fully tested and approved. I went through some of the steps of my criteria, my strategy factory criteria, but I didn't go through all of them. But when it works for over the past 2 years, that shows robustness. When it works over 15 years, that's a good sign too. But really, what you got to do is you got to test it yourself before trading. So keep that in mind. Okay, so you saw what I did with comments. I do listen to them. I do respond to them. I do sometimes, not always, act on them. So leave a comment. Give it a thumbs up. Let me know you like this video. And of course, if you haven't subscribed already, what are you thinking? Why aren't you subscribing? Subscribe. I'll keep making more videos that way. All right. Have a great day. I'm Champion Trader Kevin Davey. Thanks for watching.